Hi, this is Joe Rabil with Invest Like a Pro. I'm going to show you a 2-time frame short-term intraday trade using a 10-minute chart and a 2-minute chart. I'm looking at a 10-minute chart of Canopy Growth CGC right now. The first starting point here is I'm going to draw a downtrend line, and I'm really focused in on. Let me just point this out. This day right here, where the market gapped up, broke the downtrend line that was in place for several days. And let me just take this so it's not in the way. And I know so I talk about the 1, 2, 3 change in trend. What I'm looking for, I don't like to buy the break of the downtrend, because it's typically not really a good entry point. I'd much rather wait for the 2 on the higher time frame, especially if I've got confirmation from the MACD line, and if not the blue ADX line, I want to show pretty good strength from the buyers with the green DI line showing a nice move. But I've got clear movement for the first time in several days. Look at how the MACD lines are finally crossing above the 0 level. And just to point that out, 0 is here. That's the 0 point. So the moment the MACD line crosses above, I'm starting to watch this, especially if it takes place at the same time as you're breaking the downtrend line. Then we start to pull back. I always want to buy a pullback, especially on an intraday basis. Buying breakouts on intradays, it gets very difficult. You like to buy some form of a retracement. But I'm looking at MACD confirming what I'm seeing here. So I've got some evidence that for the first time in several days, maybe this wants to make some type of a move back to the upside. Now, if I use a smaller time frame, I really only need a target back up to this peak up here. This prior high is really a target area if I go to a lower time frame. So let me just pull this up. I'm going to show. I want to zero in on this a little bit more. Because I want you to see, again, the strong move to the upside is your 1, the test of support. And, sometimes you come all the way down to the low, but as I've said in the past, you can do a 50% retracement. And in this case, it happened to be coming into the zone between the 18 and the 40 when they were turning up. So I think that's a very bullish sign early in the morning. So once I see that, I'm going to now go down to the lower time frame. And again, just so we can see where I'm talking about, I want to look at this with this box up here. So if we go down to the lower time frame, and I'm going to take this line off because I want to show you something else. So I know as this is approaching, coming to the downside, what am I doing with the lower time frame? I'm looking to make sure, number one, that the strength of the decline isn't too powerful. If the strength of the decline has a lot of negative DI, the red DI is showing a lot of strength and causing the blue line to go up based on the selling, I'm going to be a lot less interested in playing this. But in this case, you had the gap up, and then on the pullback, and you had you made a low here, and then you made a lower high, lower low, lower high, lower low. But in the process of doing that, the blue line, the ADX line, is showing absolutely no strength, sitting down here in the mid-teens. So I know this pullback is not as strong as it might appear. And then I'm going to go and I'm going to look at MACD. And one thing I did want to point out originally on the higher time frame is even leading up to the break of the downtrend line. If you notice, when you went to a new low here on this bottom and compare it to this bottom, which was a pretty significant new low, the MACD actually made a higher bottom. So that's sort of the first signal that should trigger in your head, okay, I need to start looking for a change in trend. I've got momentum divergence developing. I'm looking for a break of the downtrend line, and then I want to look to buy the next pullback. So that's where we are right here. So now what I want to do on this time frame, on the lower time frame, which is a 2-minute chart, is I want to do the same pattern. I want to break the downtrend line, and then I want to look to buy the pullback. But in this case, because we're down on a 2-minute chart, I don't really want to buy and use if I get in here at 222.20 and use a 5 cents to 4 cent stop or something like that, I'm really just asking to get stopped out. So if we wait for confirmation by looking for this big, huge green bar coming back up through the 40, I'm still looking at getting in, say, somewhere around 22.30, risking maybe a little bit more than that. Let's call it, say, 12 cents, something along those lines. And I'm getting in with a lot more confirmation that the trend is turning back to the upside. I want to use the lower time frame to tell me that the trend is turning back up. I don't want to get in too early. If I want to get in too early, I'll just do it off the 10-minute. I mean, I could buy really off this tail here, buy it here, and I'm in early. But that doesn't necessarily, low price doesn't necessarily mean low risk. I'd rather wait for confirmation on the lower time frame that the trend is turning back to the upside, get my 1, 2, 3 starting to move. So having the 1, I'm improving my confidence. The test of the low, that's 2. That's really kind of improving my confidence even more. And then the strong move back up and the failure pattern developing here, even though I'm not waiting for the 3 up here, I am getting a little bit of confirmation because the MACD is crossing back above its signal line. And so I've got sort of a double bottom forming here. MACD is confirming, and then I'm getting back in at this point. So just the last thing I want to show you is how I would manage this trade. So I'm going to say the entry was right around 22.30. When I see a big bar developing like this, I'm probably going to jump in a little bit before the end of the bar, and maybe I'm going to say 22.30. And I'm going to say the risk is maybe about 12 cents down underneath that big green bar. I'm going to go right underneath the last low and probably a penny below that and say, you know what, if this is going to work, it's not going to reverse back down and test this area. It's just going to go exactly like it did. So the way I'd handle it, I'd buy my shares at this price, call it 22.30. It moves up about 12 cents. I'm going to raise my stop to a break even. Once I've made about what I've risked, I'm going to get to a break even. I might even trim a little bit. I might take a quarter of it off. If I've bought 1,000 shares, I might take 250 shares and pocket a little bit of profit so that if it turns on a dime, I make maybe a little bit of money. I'm also going to put another target at the 2-to-1, especially if I'm starting to get into some price resistance. I like to use price resistance for target areas, but I also like management levels because the money management levels are very important to keeping you consistent. So I'm going to scale out of a third or a half somewhere in this area. If I didn't take any at this level, I'm probably taking 500 shares of the 1,000 at least at this 2-to-1 profit target. And then I'm going to let things play out a little bit. I'm at a break even. I've pocketed some money. If it comes back down, I still make some pretty decent money on the trade. Then it forms a little bit of a consolidation, and it actually is a little pinch play, and it takes off one more time. And when I see a big bar like this, a big green bar, I'm going to be scaling out into that, especially when I know I'm reaching into my target zone. So I might even take the whole thing and just call it a day and know that I've made somewhere around 3-to-1 on the trade, something along those lines. But if I wanted to, I could follow maybe another piece. So let's say I took another half and I had a quarter of my original position left. And I let this consolidate. And once it moves up one more time, now I'm starting to see momentum divergence. At this point, as this is going to a new high, once this starts to turn around in any way, shape, or form, I'm going to be gone. I'm going to be very aggressive exiting once I see the momentum divergence in place, because you've gone to a new high. You've really made, the original entry was 22.30. You've ran up to 22.90, risking about 10 to 15 cents on the trade. So you've made a pretty big move relative to your original risk. So I think this is a good example of how to make money day trading. I also want to point out that the trade originated around 11 o'clock. And if you held for the whole period, it would have taken you about 50 minutes. If you'd have done it on the original thrust to the upside and just exited, you would have probably been out in around 20, 25 minutes. So these are the type of trades where I think if I'm in, and especially when I'm doing it off of a smaller time frame, like a 2-minute, I want to be out before lunchtime. So if you notice, I'm in at 11. By 12 o'clock, I kind of want to be out because we go through the midday doldrums during lunchtime. And so I'm using this huge thrust, and I just want to get out and take advantage of a short-term move and pocket some change for the day. So anyway, hope this was helpful. If you have any questions, please comment below. Also hit the like button and subscribe. Thank you.